Welcome, everyone, and thank you for tuning in to the Venture Capital Keynote Panel, the first virtual panel co-hosted by the Harvard College China Forum and Harvard Undergraduate Capital Partners in 2021. My name is Audrey Shine, and I am the Director of Ventures at the Harvard College China Forum.
And my name is Grace Sen, and I'm the Managing Director of External Initiatives for Harvard Undergraduate Capital Partners.
Before we begin, we want to share a little bit about our organizations. Harvard College China Forum, HCCF, is North America's premier and longest student-run conference for US-China relations. Under normal circumstances, HCCF is the proud host of an annual 100K startup pitch competition sponsored by Primavera and Gen Fund, connecting investors from Asia to startups here in the Boston ecosystem. In light of the COVID-19 pandemic, our conference will consist of 2 online VC panels today and tomorrow, culminating in an in-person conference on April 17th in Beijing.
HUCP was founded 5 years ago because we recognized that university entrepreneurial ecosystems faced a connectivity problem. They are very fragmented, so top students and founders often have difficulty connecting with strong investors. Thus, as a top undergraduate VC club at Harvard and MIT, we seek to fill that void. We exist to make venture capital and entrepreneurship accessible to students and founders at great universities.
For your information, the panel will also be live streamed on YouTube, Baidu, and Youle. To submit questions to our panelists, type them directly into the Zoom Q&A icon on the bottom bar of your screen, and we'll convey them to our moderator.
Now, allow me to introduce our moderator for the panel, Professor Yuan Zhao. Professor Zhao is an assistant professor of business administration in the accounting and management unit at Harvard Business School. So please give a warm welcome to Professor Zhao.
Okay, thank you, Grace and Audrey. It's a pleasure to be here today, moderating what will be a highly engaging conversation that could not come at a more relevant time. At today's panel discussion, we have the great privilege of hearing from leading VCs and founders in China and the United States. So today's panelists have driven significant innovations in their respective industries, ranging from impact investing to media and marketplaces, AI and deep technology, and at some of the world's biggest consumer companies. Altogether, they have driven investments in innovations that have changed the ventures landscape in China and the US. So let's welcome the panelists and thank you for your involvement today. Tang Chibo, Zhang Tao, Zhao Yuechen, Chang Xu, and Amy Sun. Let me introduce each of them. Tang Chibo is head of Hong Kong and partner at Gobi Partners China. Chibo manages the Alibaba Hong Kong Entrepreneurs Fund and has a decade of experience investing in early stage technology and media companies. Zhang Tao is the founder and the managing director of Zhao Ventures, a Sino-US impact investment group, and co-founder of the China Impact Fund, the nation's first impact fund for the environment. Tao also co-founded Zhao Foods International, focused on eco-friendly alternative protein innovations in China. Zhao Yuechen is a partner at GSR Ventures, a Silicon Valley VC focused on early-stage enterprise software and consumer technologies. Yuechen has experience in product development at Uber China, Google, and Machine Global. Chang Xu is a partner at Basis Set Venture with a focus on AI and automation. Chang co-founded Onion Math, an education technology startup in China that raised 90 million in venture capital. Amy Sun is the founder of Daylight and previously partnered at Secure Capital, where she focused on consumer growth stage companies. Earlier in her career, Amy was an instrumental early employee at Uber in growth and the product. She also scaled Facebook's stories product from 2 to 100 million daily users. So let's welcome all of our panelists today again. So let's start our discussion today. So first, we are very eager to get to know all of you and your career a little bit better. So we know you focus on different industries. So we're curious to know what has driven you to invest in your focused industries. And could you please share with us an investment thesis that you have strong conviction behind and how you formulated it?
Do you want anyone to start first?
Okay, so Yuechen, maybe let's have you to get started.
All right. Well, it's good to meet everybody. Good to see the rest of the panelists as well. Some of us are friends before, so hey, Amy. And good to be here at HCCF. Actually, quick story is I actually used to run this conference as well back in 2014. So it's fun to be back as a speaker. With regards to the sector, I personally am spending a lot of time now in the health and wellness sector. I think this industry has never been more relevant than now, and we are seeing significant movement in the whole digital health sector, especially here in the United States, but all over the world. In fact, the pace of growth has just absolutely been astonishing, from $15 billion invested over venture capital in the last year to just in Q1 having $6.7 billion invested. It is the type of growth that is very rarely seen. And one specific area thesis that I've had since the beginning of the pandemic is the rise of virtual fitness. I'm sure a lot of the panelists here, and I'm sure a lot of the audience here, probably heard of a company called Peloton, which, depending on the market day, might be worth somewhere around $30 to $40 billion. And they've gotten a lot of interest and traction because of what they've been able to do over the course of the pandemic, which is grow at more than 100%. And I think virtual fitness has always been something that people have been interested in. People have been interested in being able to work out in a more convenient manner and fashion at home or wherever they might be. But never was it more demonstrated that the consumer demand is there than when the gyms were forced to close. And my own personal thesis around virtual fitness is that we have about 350,000 trainers in the United States that previously worked part-time at different gyms and clubs across the country. And now they're suddenly freed to be able to do their own work online, to be able to reach students across the internet, free from the binds of any geographic location. They're able to connect with their students on a level never before seen. And they're able to motivate them through digital channels in a way that's never before seen. So I personally think that we're going to see a big revolution in terms of how students and trainers are connected, in terms of their relationship, and in terms of the relationship of the students within a certain trainer's class or within a certain studio. That makes fitness a lot more social and makes fitness a lot more interactive. So very much looking forward to seeing that come to fruition. And in fact, we've invested in a company that is working in that space. So happy to tell you more if you're interested.
Oh, that's great. Okay, so now let's probably hear from Chang. How about you?
Hi, everyone. Really excited to be here. I love chatting about investment thesis, so I can go on for days. How much time do we have? So I'm a partner at Basis Ventures. We're a seed fund investing in AI and automation. And one core thesis that we deeply believe in is, I think over the past 10 years, you saw the migration to cloud, that companies have all been moving to the cloud. We think that for the next 10 years, all the companies moving to the cloud have to be more intelligent and connected, or they just won't win. So to put this more concretely, we have 4 different theses we invest in: infrastructure developer tools, collaboration software, automation, and autonomy, where I primarily focus my time on infrastructure developer tools. And an example investment we have there is this company called Rasa. They're an open source conversational AI platform where they very much embody every aspect that we look for. One is bottoms up growth. Their open source community is very vibrant, which has given them a lot of leads as well as contributors to work on their product. Another one is just intelligent. As companies have a lot of data around their interactions with customers, and they need help with turning that customer interaction data into a really high dynamic and high quality chatbot. Rasa is the platform on which they built. So happy to talk about more.
We will definitely have the opportunity to talk about that more. Okay, so how about Tao?
Sure. Thanks for having me, and very excited to share my perspectives about impact investing with the student audience. I think what makes Dow Ventures and also Dow Foods International that I represent different from probably other panelists is that we are impact first investor. There's always impact logic behind what we do, and basically we want to leverage investment approach to make positive environmental and social impact, particularly when it comes to China. Instead of thesis, I would like to emphasize is always the theory of change behind what we do. So that's why I came across the concept impact investing when I studied at Harvard Kennedy School. So that's when I decided to leverage my policy background and also my business investment background to do something interesting. So I've been doing impact investing, China-focused impact investing for over 10 years so far. So I set up the China Impact Fund to focus on investing in environmental small medium-sized enterprises in China. A lot of them are not necessarily like household names, but I'm pretty confident that they have made quite positive environmental changes, impacts in China so far. And also we have supported some like cross-border, Sino-US ventures, and with the objective of trying to leverage their IP technology to benefit China and also the livelihoods of Chinese people. And I always been thinking of doing something, trying to make Chinese consumers part of the environmental solution, because behind whatever investment I'm doing, there's always like environmental impact logic. So that's why later, probably like 4 years ago, I co-founded Dow Foods International and Dow Foods Venture Fund together with a classmate from Harvard Kennedy School, Albert Chang. So we have been doing that for 4 years so far. We launched the Dow Foods Incubator. We also leveraged the venture fund to invest in quite a number of alternative protein ventures in China and also cross-border ventures so far. And very happy to see, some of the ventures already doing, pretty successfully in China. And one of the ventures, called Starfield, within the first months of, the forged the relationship, right? Like partnership with a Chinese restaurant chain called Daikos. Daikos has like 2,700 outlets across China. And within the first months, they sold like more than 300 tons of plant-based meat to replace animal meat. So which is very, from an environmental perspective, that's a very positive thing to do. So all in all, we hope to invest more young entrepreneurs, as we call them, like next generation good food entrepreneurs on a moving forward basis. And hopefully through these young entrepreneurs, we can make more and more Chinese consumers part of the Chinese environmental solution.
Sounds great. Yeah, really great. Okay, so Amy, let's hear some of your perspectives here.
Yeah, hey, thank you for having me. I'm glad to be here. So I'm actually a founder. I was an investor for the last 3 years at Sequoia. but now I've crossed back over to the light side on the back on the building side of things. But yeah, I'm still an active angel investor, so I'm happy to share some perspectives on developing theses, and I can talk a little bit about the thesis around the company that I decided to work on. The problem I decided to work on is like I really am excited about this transformation right now in the labor market. So right, like previously, you had a lot of industries where people were exchanging time or labor for earnings. And Yuechen and I like worked with a lot of Uber drivers, and I think that's like a great example of that, right? Where you're working, driving around other people, and you're getting earnings per hour there. But I think what we're seeing now is like this explosion of like digital tools and ways to like earn a living that like decouples your like physical labor hours with your earnings. And there's just so much opportunity for like technology leverage to infiltrate all of these different types of like labor markets that previously were very much offline, or where it was very much a services kind of business. And I think when there's opportunity for more technology leverage and more ways to earn, there are like opportunities for new types of marketplaces and different models to emerge. So I'm really excited about what we see there. And I'm building something in the space. So it's very exciting right now.
Yeah, sounds really exciting. Okay, so Chibo, how about you?
Yeah, hey everyone. Yeah, I'm not really sure where all the other panelists are sitting, but I'm sitting in Hong Kong right now, so it's a bit early on a Saturday morning for me, but just apologize in advance if I come off a little bit lethargic. I'm actually super excited to be here, and it's been a really long time since I've seen this many Harvard-related faces. Because out here in Asia, there's actually not that many undergrad alumni, and so it's good to be back in part of the community somehow. So I'm actually now a managing partner of Gobi Partners. We're a regional venture capital firm here in Asia, managing about $1 billion across multiple funds in the region. I'm sitting here in Hong Kong, where we actually also manage the Alibaba Entrepreneurs Fund. And so out of that, I mean, we've been investing quite actively here in Hong Kong and around Greater China region. I think in terms of sectors, I mean, all the sectors that the panelists previously mentioned, whether that's remote work or healthcare or AI impact. I mean, those are all things that excite us. I think on top of those, I mean, I would also mention logistics, advanced manufacturing, Industry 4.0 type stuff. A lot of the sustainability, AI, semiconductor space. I mean, those are also areas that really excite us. But I think in terms of just being a generalist and just sectors aside. I think one thing that does excite me, especially sitting here in Hong Kong, is this upcoming concept of the Greater Bay Area, and that's an initiative that is quite exciting for those of us who have an investment lens here in China, because the Greater Bay Area is this very sweeping initiative by the Chinese government to rope in and align the resources of Hong Kong, Macau. And then 9 cities in the Guangdong province, including Shenzhen and Guangzhou. And so like this is kind of an initiative it's cross-border. There's a lot of startup and innovation being driven by local governments here on the ground. There will be further integration between the special administrative regions of Hong Kong and Macau, and those inland cities or mainland cities. So I think that's something that we're keeping a very close eye on. We're going to make some new announcements coming up over the next few months in terms of new funds, new offices, and I think that's something that really excites us here.
Great, thank you. They are all excited. I can see all the excitement and passion from each of you. So I remember Yuechen, you mentioned about the pandemic. So let's actually talk more about that. We know that COVID-19 has brought about some trends in venture capital, such as a renewed focus on home health, gig economy workers, remote work, or sustainability. So how much of the trends in venture capital brought on by COVID-19 do you think are a permanent fixture of a post-pandemic economy? Yuechen, do you want to get started?
Sure, I'll get started, and then I'd love to hear from the rest of the panelists, of course. My own personal bias is that I believe that a lot of the things that we're seeing in this pandemic are going to be things that will stay with us for a very long time. Instead of it being a temporary shift to a different kind of life or to a different kind of economy, I think we're seeing an acceleration to a different kind of economy. A lot of the companies actually that benefited the most from this shift to online or to gig economy, or a lot of the trends that we're seeing, were companies that were founded a very long time ago. DoorDash founded a long time ago, Peloton founded a long time ago, Instacart founded a long time ago, Teladoc, Livongo founded a long time ago in the health space. So all of these companies were founded, they were growing fast. It's just that the pandemic made them grow faster because people realized that these were things that they needed and actually provided value for them. Actually, one of the most interesting stories I think is a little, perhaps used to be little, now not so little, known company called Wee. W-E-E-E. They focus on Asian and ethnic groceries. I met this company in 2018 when they were raising their Series A, and
wait, you me too. Did you get the Lady M mooncakes?
And I did not invest. And then I saw in Bloomberg, I think a couple of weeks ago, that they raised it $4 billion. So that's not to say that I regret that decision, which I do, but it's just that these companies that accelerated and really grew into their own right during the pandemic were founded before. And so I really think it's an acceleration. One other data point that I can offer you from the health perspective is you've probably all heard about telehealth, probably heard about everything moving to video in terms of how patients interact with providers. One thing that people were interested in is sort of, is this going to be a temporary thing? Are people going to interact with their providers over video during the pandemic, and then when the pandemic subsides, go back into the doctor's office? But actually, what we're seeing is a kind of a curve where it really spiked in March or April, where 40 or 50% of all doctor visits were being conducted over video, and then it came down slightly, but it never came down to the pre-pandemic levels of 1% to 2%, but rather it stayed pretty consistent at levels of around 20%. So I think for a lot of the other services we're going to see, whether it's food delivery or whether it's grocery delivery or virtual fitness, we might see a temporary blip when things open back up and people are able to enjoy their activities offline again. But I think a lot of these things are here to stay with us because they do provide real value and they will continue to grow post-pandemic.
Yeah, that's great.
I can share some perspectives.
Sure.
So I absolutely agree. A lot of the trends that have been happening for a while have just been really accelerated. And we see that across our portfolio, where the buying cycles have all of a sudden gotten much shorter just because of this temporary dislocation, and which creates an impetus for people to find new solutions. To give you an example, we have a company in our portfolio that's Ergion, that's builds fences, and you think that fence building construction that got halted, but they actually really benefit because if someone's fixing your fence, that's outside your house, so it's actually okay home construction work to do. I mean, the other thing is all of their scoping, all the interactions before your fence actually gets fixed, that happens over video, and that's only possible through this platform as opposed to going to a traditional contractor. And finally, as everyone's sitting at home staring at their broken fence or driveways or outside, they're like, yeah, I can improve that. So just the ability to buy that really accelerated. and this is true in a lot of the enterprise software companies that we invest in as well. What's interesting to, like, you're asking what COVID trends will not stay. So we've had some companies where their businesses were materially impacted by COVID, but over the past couple of months, I've seen a huge uplift back to pre-pandemic levels in their original business. So examples are software for blue collar workers, where they were primarily helping restaurants hire. And as you might imagine, restaurants stopped hiring for a while. Now they're hiring all over again. So they've seen incredible growth recently. Another one, their parts of the business is around taking photos of events and taking photos for families. So events haven't come back up, but family photo shoots absolutely back to actually higher than pre-pandemic levels. So we're already seeing this great rehiring and all this behavior snapping back, like Yuechen said.
Yeah, wow, this is great to hear.
I'd like to share a little bit perspective on this, Yuan. So yeah, from impact perspective, investing perspective, I think something like the pandemic is exactly something we are trying to leverage the investment approach to prevent, rather than after it happens, then we figure out something to do with either to deal with it or look for the opportunities to invest in. This does not necessarily mean that impact investing is I'm pretty sure all other investors are doing something to deal with the situation, but from impact investing perspective, and the pandemic, running out of antibiotics, the climate change, or something that we are trying to through what we do, trying to keep from happening, rather than wait to something, especially something disastrous to happen. Then because for example, the climate change, right? So if it really happens at the level that is not that preventable in terms of the damage it causes to humankind, I think it will be too late for everyone. So hopefully after the pandemic, that's also kind of our experience with the younger generation people. Is a lot of the younger generation people are starting to realize that they probably through their lifestyle, through the what they purchase, what they consume, they probably can do something better for the world. That's what we have come to realize or come to see from some of the younger generation consumers in China nowadays.
Okay. Yeah. Wow. This is really great to know. So we got some perspectives in terms of the time series trends. Now, I want to get some of your perspectives on the cross-country differences. So what are your perspectives on the differences between the VC landscape in China and the US? So.
Maybe I'll jump in here.
Sure, Chibo, yeah.
So I think most of our investments are, obviously on the Asia side of things, but we have done like a couple, investments that have a lot of more operations in the U.S., driven by Silicon Valley-based entrepreneurs, and some of these are a company like Home Court, which is also in the home fitness space. A company called Sandbox, which is location-based VR. So those are some startups that started off in the valley, or have strong ties to the valley. And I think just looking at some of the entrepreneurs and their behaviors and their approach to doing startups. I mean, I think there is quite a big difference with the entrepreneurs that we see locally here in China. I mean, I feel like in the valley. A lot of the entrepreneurs, they're more serial entrepreneur types. A lot of them are super high profile background. They're coming from Ivy League schools. They have a lot of options, and they have a lot of access to capital, right? A lot of access to opportunity. And so I think that kind of feeds into the mentality of, oh, okay, well, look, I mean, like I'm going to make this startup, from 0 to 100 and less than 3 years, 4 years, whatever it is. And they're more willing to embrace failure, and they're more. I think it's they would be more apt to kind of write off things. And just if they don't feel like it's going in a direction, or if they're not able to raise like a $20-30 million Series A or Series B, they'll be like, okay, well, on to the next, and then we'll just burn everything and start my next company. I feel like in for the entrepreneurs that are based in China, a lot of them are not from such great backgrounds. I mean, like, obviously, yeah, sure, we have Beida, Tsinghua, like alumni and people doing this kind of stuff, but there's also a lot of grassroots entrepreneurs, right? And so I think like for a lot of these types of entrepreneurs, I mean, the startups and the things that they're doing are really like the only avenues that they have to success, or to something. And those opportunities don't come about very often. And so I think if they're able to raise a round or two, I mean, like they'll try to make things work, and they'll really stick it out, and just try. I feel like they're maybe I'm interested to hear what guys like Yuechen and Amy, who've been investing in the Valley, like have to say about this. But I think that's just something that I've noticed. I guess, I mean, in particular, just with one case where there was just one co-founder or something in the middle, or basically in like April, May last year. They had gone out for like a big Series B, but because their business was inherently impacted by the COVID situation, and just like the shutdown and lockdown, ultimately they were just like, well, I'm just gonna go start another venture and raise another like $10 million instead of like sticking it out for this $30 million Series B raise. And that was a little bit disappointing for me. And so maybe I have a personal bias here, but I think like that's just something I've seen kind of in terms of the mentality of different entrepreneurs in these regions.
Yeah, thanks for your insight, Chibo. So I'm curious because I know that you are leading instrumental investment in the media and technology space. So let me try to push you a little bit more. So how do you think innovation is unfolding, perhaps differently in China and the US?
Well, I mean, I think, and this goes back, I don't know, like 10, 15 years, 20 years even. I mean, I think like when entrepreneurs started building businesses and starting building products here in China, because I think the market was just so competitive, right? There are just like so many entrepreneurs at, the last like 15, 20 years probably. I mean, a lot of the innovation coming out was more business model based. And so like the barriers to entry were a little bit lower. A lot of it was, still copying some of the different things that we had seen in the Valley and other parts of the world. And so, I think the entrepreneurs here, they started off with a mindset that, look, I mean, like we just need to get to market. We need to get this product out. We need to get market share and mind share as soon as we can. It doesn't really matter if our product is not perfect yet, but we can roll it out. We can get like, as long as the problem we're solving is fundamental enough, we can roll it out and iterate and improve upon it then or after. And as long as we are out and we're starting to show traction, then we're able to raise the next round faster, and we're able to raise a bigger round. And so like I think like the mentality of that, actually it was very different from a Silicon Valley or like a more developed market perspective, because I think in those markets a lot of the entrepreneurs were more like, okay, well, I actually need a perfect product. I need the best user experience, and I got to make sure that everything is optimized before I actually go to market and present this baby, right, like my baby to the world, and have them all appreciate its beauty and stuff like that. But like in China, people were just like, look, I mean, I'm just going to throw it out there, see if stuff sticks, and as long as I'm out to market faster than my 4 other competitors, then I can potentially raise a round and go from there.
Yeah. Okay. So Chang, so let me call you out a little bit. So I understand you co-founded an education technology company in China. So what's your perspective on the innovation in China and the US? And specifically, what role do you believe China plays in the world's innovation? If you can share with us your perspective.
Sure.
That'd be great.
I think that China and the US innovation ecosystems are quite separate and become even more divergent every year, thanks to what's happening in the world. And when I was co-founding this edtech company in China, the edtech market in China is very different and very insulated from the edtech market in the rest of the world because of the dynamics in the country. Edtech market in China is very different from edtech market in the US. And I think there's a lot of venture capital in China. It's a very mature ecosystem there with local ecosystem players, and separately in the US. And the trends there are also, I think maybe you can say 10 years ago, China might have been copying some of the products from US or some of the thoughts from US, but I think now it very much is a divergent path where some things in the US, we can actually take inspiration in what's happening in China. So I think it's interesting. I think if you have an opportunity to study both ecosystems, you can get ideas and on what you do. One anecdote I will share is a few years ago, at the beginning of our fund, this was before I joined, so the story I heard, my partner brought a number of portfolio company founders as well as other friends to China to visit, like, ByteDance and all the hot companies in China. And the key takeaway for some of the founders were, wow, I need to move 10 times faster, because the founders there just moved 10 times faster, and they need to be more, they felt that they could be more aggressive on goals and whatnot. I just think it's a different mentality suited for a different ecosystem. It's good to see and understand both ecosystems and pick what's helpful to you and your business.
Yeah, that's great to hear. Amy?
I have a question for Chibo and Chang. Like, what is the venture environment like right now, like sort of post-pandemic? Because like in the US, like the way it feels is like there's just so much capital in the system. The rounds are getting so competitive and so marked up. And Chibo, at the point you made about like, oh, my precious startup, it has to find product market fit and feel good before I release it in the world. It's not what it's like right now. Like, so many people are like raising like very large rounds, like kind of with an idea. And it feels very different right now because of the amount of money supply that is like being injected into the economy and this like inflation of assets kind of across the board. Like, is there a similar impact in China? I don't think China's been as aggressive with stimulus as the US. Like, how has that, like, it impacted things?
Yeah, no, I mean, China has not, just been active on the stimulus side because they haven't had to, right? I mean, like, China's economy and, the life in China has been even more active than normal, I would say, within the borders of China for the last, since last April, basically, right? I mean, like, people are walking around China for the last like 8 months, basically, without masks. They're going out, to hot pots, and, they're traveling. Like, I have friends that were like, May holiday, October holiday, they were like, oh yeah, I'm going to Xinjiang and like, taking 2 weeks off. And I'm like, dude, I've been stuck in Hong Kong for like last, like, in my home, or just like the max I can go is like, the peak or something, right? For like a weekend hike. And you guys are all going out, like freaking having the times of your lives and all these like amazing holidays and getaways. And I mean, like, tourism, like, consumption, like shopping malls, like everything is, off the, like, it's going crazy, right? I mean, I heard some like numbers the other day. It was just like, and for LVMH group, I mean, China used to be what, like number 4 top market in the world. It's by far like, number 1, like by like a lot, like this year. And so I think, in terms of like the domestic travel market, I mean, that's higher than ever before. I think, in terms of like, if you then look back in terms of like the investment side, I mean, there is more money than ever, right? I mean, I think it's not necessarily because of the stimulus, although yeah, sure, the government is promoting innovation technology very heavily, especially in the regions that we're looking at, and in special sectors as well, right? Like semiconductors, or like some of these deeper tech startups, or deeper tech sectors that are being more affected by what's going on between the US and China.
That's fascinating. Here we are like asking like, oh, how will the world change after pandemic? We should have just asked you, like, what
Yeah, no, China is like
state?
post-pandemic for like last,
Yeah.
year, right? I mean, like it's, oh yeah. Although
Are
I'm
they
very
doing
happy to
that-
hear that, everything in the US is kind of, normalizing as well. Like, so the VR company that I mentioned before, Sandbox, they have like these offline VR experience centers in the US, and they've all been closed for like, so the company's been in like hibernation for like basically the last, 8-9 months. But the good thing is, I mean, they've actually, been able to survive and pull through. Whereas, some of their competitors were actually, went under. But I think like we had good news last week. It was just all their stores are now open in the U.S. and so congratulations to you guys.
Well, actually, I think that may be a little early. I think it's good news for Sandbox. May not be good news for the general population, unfortunately.
Right. How many of you guys are vaccinated now?
I'm one of two.
Yeah, one dose.
But
Yeah.
the good thing is that for the people in the US, you probably know, April 19th should be open to everybody across all the states. So
Yeah,
that's what we're looking forward to.
Yeah, for sure. I am also looking forward to that too. Thanks for all your perspectives and discussions here. This is really great. So we talk about the innovation between China and the US. So I want to move on to talk about another very important topic, which is impact investing. So Tao, we know you have established China's first impact fund for environmental SMEs, and also led impact investing across the US and China. So we'd like to get your perspectives on this topic. So how much do you think the rise of the conscious consumer following the pandemic's human and social cost is affecting impact investing today?
Yeah, I already talked about a little bit about that. Yeah, it's definitely making some interesting changes, especially in the lifestyle of the younger generation consumers, especially in the alternative protein sector we currently focus on. We through the entrepreneurs we work with, we're starting to see changes, right? So in consumer behavior, especially from the younger generation consumers, and also we do believe that the younger generation people, they care about the world. They care about making a change through what they consume, what they do on a daily basis. But at the same time, we of course, from an investment perspective, we always need to find the right companies to invest in, the right company with the right products, with the right technology approach, with the right team, right? So that's on one hand, we're trying to find the right companies to support, the right ventures to support. On the other hand, I think it's interesting to see that some of the changes that are happening with the younger generation consumers in China nowadays. You may or may not, although we don't want to dictate, right, like environmental impact upon the purchase decisions of the consumers. But I'm starting to see some of the younger generation consumers are definitely paying attention to say the environmental premium in the products they purchase, something like that. So it's changing, but in a way it makes impact investing a little bit easier, but still we have a long way to go as far as impact investing in China is concerned.
Okay, so given you are working very hard on this, let me push you a little bit more. So do you think China will be able to innovate better than the US in terms of the environmental impact, or let's say something along that line?
I think China has to, so they have to innovate better than the US, because China is confronted with many more challenges than US is. Just to be honest, right? So, in terms of the population, in terms of the aging society, it has to face. In terms of, the environmental challenges, it is, it is facing, water shortage, food security, protein security, right? So that's something we worry about all the time. That's why we do what we do, right? So China definitely has many more challenges, or a host of challenges that more more, I wouldn't say severe, but definitely more daunting, right? So in terms of the things they need to, the problem they need to solve, the obstacle they need to overcome in order to make sure that their people live a better life. So I think that in that regard, China has to innovate better. That's either from the bottom up or from the top down.
Yeah. Okay. Yeah. This is great to know, because it's challenging, but there are also a lot of opportunities too. Thank you. Yeah, thank you, Tao. So given we have very successful VCs, and we also have founders like Amy. So now I would like to open the discussion about fundraising. So in your work with founders or as a founder yourself, can you please comment on how the fundraising environment for founders has changed over the last year? On the one hand, it's a tough economic environment for founders to weather. But on the other hand, there are more opportunities in certain sections like healthcare, productivity software, and media or entertainment industries than ever before. So what is your verdict on balance?
I can actually start. I'm happy to take this because I actually fundraised during the pandemic.
Great.
Round. So I have some experience here. Overall, I think this market is very favorable towards being a founder. And so if you're interested in starting a company one day, like now's a great time. And that was kind of like what went through my mind too. Like it was like, wow, like there's so many new opportunities just because the world is changing so much. And there's like raising money is not as difficult as usual, because I think there's a few factors at play. One is just like there is a lot of money in the system. There are a lot of people who are investing, whether it's institutions, angels, solo GP funds, or like even the larger crossover funds who are entering like the earlier stage investing space. So there's just like a lot of different people that you can like raise money from, more so than before, where it's like a more limited set of folks like doing the seed stage or pre-seed investing. So there's that. And then two, it's like an easier process to manage because you're all on Zoom. Like before, if you lived in San Francisco, or if you didn't live in San Francisco, you would have to fly into San Francisco, drive an hour south to Sand Hill Road, and kind of just go and do these physical meetings, like partner meetings, and you drive another hour and meet with another firm. And it was like a very tiring and tedious process where there's, a room and 20 people kind of staring at you as you do your pitch. And now it's all happening over Zoom, right? So you can, schedule them back to back. You can meet a lot more people who aren't necessarily in the same geography as you. So you can meet with funds from, the New York and San Francisco and China and Europe, and it's all like a super streamlined process. And I noticed it happens faster too. So like the time between like first meeting and term sheet and wiring ends up happening much more quickly, because you don't have to like accommodate for these schedules that were previously like very much tied to the physical work experience. Like at Sequoia, we always had partner meetings on Mondays. Well, now that everyone is remote, like why not schedule an impromptu partner meeting on a Wednesday afternoon, because we have to make a decision quickly. So I noticed that there's a lot of like positive changes of like the investment community adopting more digital tools that like expedites the process quite a bit.
Yeah, so that's interesting. And you talk about the there are opportunities in terms of the virtual meetings. So I'm actually curious to know, it's still different between face-to-face meetings and the virtual meetings. So, and this is a question probably for everyone here. Are there any virtual communication skills that you think future entrepreneurs should have in order to present the best of themselves virtually?
I'll go first. I think one thing that I've noticed some entrepreneurs be much better than others is at managing a Zoom meeting. when you have 5, 6, 7, 8, 10 people in a Zoom meeting, it's very easy for people to just not pay attention to you. And when you're pitching, that's probably the worst thing that can happen, because you have a couple partners not paying attention, and then they come in and they ask you a question and you answer the question, and then 5 minutes later somebody else comes in and asks you the same question, and then 5 minutes later somebody asks you the same question. It's just very disruptive, and you might not necessarily get the right, you may not have imparted the right message to everybody. So one person may be really excited, another person may not be excited, and neither of them may have all the information because they spaced out during the Zoom meeting. So it's very important. This happens all the time, okay? So I think it's very important for you. It's even more important than in an in-person setting to make sure that every single thing that you're saying is important, is concise, is something that people want to hear, want to listen to, because the moment you lose them, they're not coming back, right? They might come back 5, 10 minutes later, and by that time you've lost them. So it's so important than ever before to master your pitch, to master your story, to know what you're saying every single minute of that meeting, and also to be able to engage with the different people that are on the meeting. Some of them may have their video on, some of them may have their video off, right? So knowing when to interject, when to ask questions, when to respond to questions, and who to point to and who to point out, I think is very important. So it's all an art. Some are really good at it, some are not so good at it, but the better you are at it, I think the higher your chances of success.
Yeah, this is really great to know for especially in today's world. Yeah, so okay, so given I'm very conscious about the time. So given we have people in the US, we have people in Hong Kong, so and we have people in mainland China. So I think Chibo, you mentioned this a little bit. With the so I want to hear about your perspectives about the collaboration between the US and China. So what do you think it takes to bridge the innovation efforts between China and the US and foster more cross-country collaboration, especially in the current environment?
Wow, I unmuted myself to answer the Zoom question. I think that was a much less sensitive question. But okay, well now that I'm on the spot for this one, no, I think, look, I mean, U.S. China, things aren't great, right? I mean, I think that from what's happened over the last few years, I mean, there's definitely a divergence, I think one of the other speakers said, between these two ecosystems. I feel like, look, I mean, if you're sitting in the US, you'll probably have one view. For myself sitting out here in Asia, I think I have a different view. But in general, I mean, I just feel like, look, I mean, politics will always impact technology. I think, and just in terms of the regulations and the addressable markets, and even in terms of things like national pride and things like this, right? I mean, and with what's going on, I mean, I think that on the technology side, sitting out here in China, it's very clear that there's there's a lot of holes that need to be filled, right? There's a lot of gaps in the market now where foreign or US kind of based products and technologies used to be able to play a role. And because of what's going on, I mean, like now those parts are being taken away. And so I think, from a Chinese government or from, people sitting out here, there needs to be some way to fill those holes, right? And I think that in the short term, there are challenges, but, at the same time, I feel like those you take a different look at those. I mean, those are definitely opportunities, right? I think, like there will be pain in the short term, and just in terms of, companies and just trying to fill in their supply chains, or just trying to fill in the gaps of, what's been taken away. But I think that will just spur more innovation. That will just spur more efforts and research and, whatever it takes to get those gaps filled in, either locally or with friendly partners. I think in terms of, Chinese companies and Chinese startups that are looking to go abroad, I mean, yeah, sure, maybe going straight to the US isn't like the best option right now, right? Probably going straight to India is not a great option either. I mean, there's different areas in the world that, you know, are friendlier than others. But you know, I think you just work as an entrepreneur. You're always working within the parameters of, you know, what the world gives you in terms of opportunity. And so I don't think like there will be that big of a difference for like these entrepreneurs. I mean, they're still going to be building their businesses. They're still going to be like, you know, creating new technologies. It's just where those technologies and those businesses are being applied and, you know, targeted to. I think for myself, I mean, like in terms of investment side, I've actually, I feel like benefited a little bit from, you know, from what's going on, right? Because you know, there's these new startups coming out. They're focused on different parts of the value chain. They're, you know, doing more deep tech type stuff. And, you know, originally they're you know, some of their comps would be like TI and, you know, ADI out in the US, but, you know, those are no longer in the picture. So we're like, yes, great. Okay, well, now let's do make some products that could potentially be substitutes or, you know, fill in those gaps. So I think that there's definitely like, you know, different opportunities for investors with the right mandates. And yeah, I mean, I think that what we have seen over the last few years is probably not going to go away in the near future. You know, different administration, but, you know, similar type policies maybe. So yeah, I don't know. I don't want to get it too much into politics here, but yeah, just from an investment perspective, there's always challenges and opportunities.
Yeah, great. Thanks, Chibo. There are definitely opportunities and the challenges, and hopefully, into this panel, a lot of I'm sure a lot of people learn a lot of things from you guys. So thanks everyone again for your great participation and the discussion for this panel. We definitely learned about a lot from your perspectives. So now let me hand over to our host.
We'd like to once again thank our speakers Amy San, Chang Xu, Tang Chibo, Zhang Tao, and Zhao Yuechen for taking the time to join us today. This has been an incredibly insightful conversation, and I've learned so much. We've all learned so much, from the differences between founder and VC culture in the US and China, to the need for innovation for the environment and impact investing, and the importance of delivering an excellent Zoom pitch. Those are some really great tips to come out of that.
If you'd like to hear more, this panel is just the beginning of a series of awesome events in the week to come. Tomorrow, we have the second part of this VC panel at 8 p.m. ET, so the same time as today. And next week, we have more events from the main HTCF conference featuring topics including healthcare, finance, consumer trends, technology, and more, and hearing from international speakers such as Kevin Rudd, the former Prime Minister of Australia, and Tang Yi, China CEO of Credit Suisse. A full conference agenda is online at harvardchina.org.
And on the HUCP side, you can hear more great content like this through our YouTube channel, big plug, where we've posted our fireside chats and workshops with leading US VCs from our 4-day startup bootcamp. We also have an innovation fund competition featuring Harvard's premier startups, which you can learn about on our podcast out on Apple and Spotify. We hope to see you at future HUCP programming, and otherwise we'll see everyone again tomorrow for part 2. Thank you so much again to all of our panelists, and have a great rest of your day.